Hey everyone, it's Mike Andes, and you're listening to the Business Bootcamp Podcast. Today, I'm going to be sharing the profit and loss statements from two lawn care companies that I actually own. Corporately owned Augusta lawn care locations, one that has like 15 trucks, one that has 2 trucks. And so very different sides of the spectrum. One's been in business for 6 or 7 years, one's been in business for 6 or 7 months. And so just a really good comparison, I think, for some of you. If you've watched these before, you'll enjoy this one. Monthly kind of episode of me sharing my numbers. We're going to go directly into the profit and loss statements. You can see where we spent money, where we made money, and I look forward to it. Before we get into the show today, though, a big thank you to today's sponsor, which is Gusto. If you haven't already, go to gusto.com/bootcamp. Try out their software completely free for 90 days if you use that link, and you can pay your employees directly into their bank account without having to write a check, without having to do numbers on a calculator, or making an error when you're writing out the check. None of that anymore. Direct deposit directly into their account. Get a W-2 for them automatically at the end of the year. No more back and forth with your accountant. It's very, very cost effective even after the free trial. So try out today. Go to gusto.com/bootcamp. All right, so we are going to start off with the Bellingham location. The Bellingham location is the one that we started first. Now, I got to make this very clear. We started this first location in a little town called Blaine. Blaine has like 6 or 7,000 residents, and we grew the business past $1 million in revenue before moving to Bellingham. All right, so a lot of people think that you need to have a big territory, like hundreds of thousands of people or 1 million people. Like, I need all of Seattle to grow a big business. You don't. I actually like the smaller market and having a smaller area where I'm marketing, because I can be a big fish in a small pond, and by having a smaller area that I drive, less drive time, and when I do my marketing, everyone knows who I am. Like when we were in Blaine, if I wanted to do a Facebook ad, literally everyone saw it. If I wanted to do a every door direct mail campaign, I could send it to every single person in the city, and it wouldn't be too expensive. So like everyone knew you. So brand penetration is almost better inside a smaller area and a smaller number of people. I'm a big believer in this. Bellingham location, it's November. We do lay off some of our crew, not all of them, not even half now. Most of them we actually kept on this year because of winter services, which we'll be talking about at Landscape Summit, how we keep our crew busy. We don't have a lot of snow plowing in our area. We can't do projects, really big ones, because it's so wet. Like anything with the mud just being absolutely miserable. You can't grade or dig or anything like that consistently during the winter. So our income at, so let's go ahead and throw up the profit and loss statement. I don't know where Josh is going to put it, but it might even just cover me completely. The profit and loss statement from November 2020, you are going to see, first of all, the service income, $141,000. That sale of product income negative above that is from a refund. Actually, it's not even a refund, it's a bounce check. All right, so that was a bounce check that happened at the very last of November, like the 29th, I think, or 30th. And so therefore, it shows up as a negative amount, and then it'll be reconciled in December. So, all right, expenses. You'll notice the advertising is really high. There's a few reasons for that. Number one, we're doing a bunch of testing for the franchisees on winter services and spending money in certain areas. We're doing some testing. But also, you'll notice that our revenues compared to even October are actually up, and it's because we're spending quite a bit on marketing. As a function of revenue, we're really only spending like 4% of our revenue on marketing on this month. But like we didn't spend that much money on marketing for like 8 months out of the year, like 6 months out of the year, I should say, from like all the way from like March to September. We probably didn't even spend $6,000, and here we are spending $5,700 in advertising and marketing in November. So quite a bit we spent on marketing. Again, like we wanted to keep the crew busy. It's very important to us, and you can see the profit margins are high enough on the work that we do, so that 4% in advertising is fine. And for $6,000 in marketing, we can do a lot. We do, a whole bunch of different avenues: Google, Nextdoor, Facebook. A whole bunch. We haven't done any print this month. But anyways, bank charges and fees. I don't know why there's a negative charge. Probably something small. Anyways, like a chargeback or something like that. Credit card processing fees, $2,000. Employee other. This is things like uniform, stuff like that. $137. Employee other. Fuel expense, almost $2,000. Insurance and licensing, $4,000. That's a little bit higher, I think, than usual because we just had to change our insurance plan. We had to change companies, and we had to, because we've been growing so much, the one company said, hey, like you're kind of not the fit for us anymore, so we had to move on to a different company, and we've added a lot more employees in the past year, and so it increased our insurance. Now, our insurance will not be $4,000 per month. That was the initial, like, you got to pay some money up front to start the plan. And what's different, like in the past, I would have paid the whole year right away because there's not a financing charge. However, because we have profit sharing, I don't like to do that anymore because it might be better short term or better long term. But the problem is, like, when you start doing profit sharing, if I would have spent, say, $15,000, I forget exactly what it was, but let's say it was $15,000 on paying for all the insurance for the year, it would have really hurt them this quarter, or it would have impacted their profit sharing. And I don't like to do that. I try to keep the months as consistent as possible. So if I know there's a big expense, I try to match it up on a month where I know we're going to be getting a really busy month with lots of revenues. So I try to even it out as much as possible because now the team is impacted by my decisions in terms of their profit sharing. So I try to even out the profitability a little bit more now. Whereas in the past, I would have just paid for that because I know that there is some finance charges of taking an insurance bill over the course of a year and doing monthly payments. I know that. And it's better to pay it all off at once. But profit sharing, I want it to be a consistent profit sharing for them each quarter, or a little, as consistent as I can possibly make it. So I did go ahead and do where I only think I paid like $2,500 to get the program started, and then every month there's a premium that we pay. Office and software, you got payroll expenses, $57,000, rent and utilities, $2,200. That includes like internet, the toilet, trash, stuff like that. We're on solar and backup power, which is not great at all. We're looking to buy property and build so that way we can get around this issue, but it's a pain in the neck. I would be happy to pay a few $100s a month in power bills and utilities if we didn't have to run off generators and solar. But anyways, especially this time of year, pain in the neck. In the summer, not so bad. You got sunshine. Right now, you don't. Subcontractors, we don't do irrigation, so we do have some of our bigger commercial properties. We do have irrigation inside of our contract, but then we have subcontractors that come in and actually do the irrigation, fix the heads, blow out the system, stuff like that. Taxes, you got to pay taxes, $14,000. Tools, supplies, and materials, that's like mulch, gravel, etc., mostly stuff like that. Truck and equipment expense. If you watched my other video the other day, you heard me say that we had about $4,000 to $5,000. To be honest, it was $4,800 that we had left on a skid steer payment that we went ahead and paid off because we sold it. So what you don't see is the fact that we sold this piece of equipment for $17,000 today, which is December the 2nd. So that isn't going to be recognized until December. But in terms of equipment, we did have to pay that $4,000 or $5,000 off. And I should have this number right now when I'm talking about it, but I'm pretty sure that was the last bit of loan besides like $1,000 or $2,000 on a mower from several years ago. Both of those loans were 0%, and I was going to pay them off a couple years ago. I was like, look, it's 0%. Let's just run with it and just pay them off, and it's not like I'm going to save any money. So, time value of money, I was like, okay, we'll stick with the payment. Well, we went to sell the skid steer, and it only had like 400 hours on it, and so we went ahead and paid off the rest of the debt, so that way the lien holder was off of the account, and then sold the piece of equipment for $17,000. And it wasn't a bad deal all in all because we bought it, I think, for $23,000. We used it for the past couple years. We used it quite a bit, not in terms of hours, but we used it pretty consistently. But now that we're really simplifying our systems, we don't need 3 loaders, and that's what we have. We don't need 3. Like 2 is all we need. Totally fine. We have a track loader and a skid steer. Totally works fine. Maybe once or twice a year we'll have to like rent another one, and we'd rather do that. But in terms of scheduling jobs, you can just make sure they all line up correctly so you don't ever need 3 at the same time. But we don't do big stuff anymore. We've really tried to simplify things the past couple years, and so therefore we sold the other skid steer. So all in all, net profit of $34,277. That's a net profit of a little over 20%, which is what we shoot for over the course of the year. All right, that is the Bellingham location, and some people will ask this, I'm sure. I think we have now 10 to 12 people in the field working at Augusta, whereas during the summer months, we have like 15 to 20. And so there's a couple of them that basically you'll find other jobs during the winter. None of them went on unemployment. It's more or less they have other stuff that they do already, and they're like, hey, we'll just go work for 3 months so that way everyone that's here can work full time. Because we could put everyone on like 30 hours a week, but we'd say, hey, we'd rather give people full-time or as many hours as we possibly can for the daylight, and then the other folks, they usually find other things to do, or they are already planning to leave after November. So November is kind of like our last, our mowing season ends in November, things like that. So you'll see a decline in revenue like in December, because right now December's a lot of just winter services. There's not much projects. There's no mowing and a lot of equipment maintenance and things that we got to wrap up at the end of the year. So look forward to November's P&L as well. Now let's switch over to the smaller location, which is the Mount Vernon location. If you have not followed or heard a lot about Mount Vernon, we started this in March of 2020, right in the middle as the pandemic was striking, literally that week when we went to lockdown. That's when we launched this business. There's a second corporately owned location. I am not there on a daily basis. I am not there on a weekly basis. I'm not there on a monthly basis. I connect with Tim, who is the manager, and I connect with him about once a month, and literally for 20, 30 minutes. He has command center to do all of his full service, we call it, and that's what you'll see here is this legal and professional fees, that $2,200 right there. That's command center, and he's charged like a franchisee. So he gets charged the $600 per month because he's in his first year of business. So as a franchisee at Augusta, the first year is $600 per month, and then after that, it's $1,200 per month. Doesn't change. It's a standard flat fee. So that $600 is wrapped up in this number, and so you can tell $600 off of $2,200, about $1,500-$1,600 he paid due command center for their services, which is answering the phone, sending out estimates, doing his scheduling, sending out his invoices, just about everything that is in the office. All he is doing right now, because he's by himself, is working during the day, and then when he has an estimate, he has to put those notes in, and then they format it, connect a video, send it to the customer, and take care of setting up the job, taking a deposit, all the rest of it. So some people freak out over the fact that I guess probably 20% almost of his revenue, about 18% of his revenue is going towards command center, and it seems like a lot. However, if I had to hire a full-time office person that was good, I'd be looking at $3,000 a month in payroll. I'd be looking at buying an office. I would be looking at all the utilities and all of that stuff. When literally, you can see here this rent and lease. It says $600 because they paid for 2 months in one, but it's $300 per month to rent the facility. Whereas if I had an office and computers and a staff, and I had more parking for those office staff, and I had a bathroom and internet, you're looking at least $5,500 to $6,000 to have that one office person operating per month. And literally for the $2,200, including his franchise fee, that's what he's getting covered. All right. So that's why literally one person working throughout this slow season, he's able to at least break even and make a profit. Okay, so this is the beauty of Command Center, is when in spring, he'll probably spend $3,000 or $4,000 at Command Center when he's getting 10 estimates a day. Whereas right now, and you'll definitely see it probably in December, it'll go down significantly because he's not getting all the leads. He's more or less doing winter services and farming his current client database. So you got advertising, you see credit card expense, fuel expense, insurance. I think that's pretty much every single month the same. That's 2 trucks and liability for very simple services. Professional liability, I think $1 million per instance, $2 million total. Office supplies and software, you can see that there. That includes Service Autopilot for him. And I'm on there too because we use that account for training the franchisees in terms of Service Autopilot. So that software is in there. Again, rent and lease is usually $300 per month, but that's $600 they paid for 2 months in the same. Taxes and licenses, got to pay taxes. Tools and supplies includes little stuff if you're doing projects and like that, and then wages and employee related, and that's basically all going to the manager right now. And this was not a profit sharing month. On a quarterly basis, he gets profit sharing. So there's all the expenses. Total net income was $1,000, which is low, right? That's 8% net profit, 8% profitability. But if you go back into the summer and busy times, usually hitting 40-50% profitability because he had one other employee, which doubled the production, and they were hitting $25,000 in monthly revenue, right? So I know that having just that one person as a manager there, he can at least break even, make a little bit of profit every month throughout the winter, which is awesome. Build up the cash reserves, be ready for spring when we'll probably get another truck and a couple employees, right? So we do not intend this Mount Vernon location to pour money on it. You can see we're not spending a ton on marketing or anything, but we could technically spend $20,000 in marketing and probably build this thing up to 5 and 6 trucks next spring, 10 employees very quickly, right? But I'm not going to pour money onto it. I'm going to let it grow natively and organically and really allow the manager there to determine how big that gets. It's really going to be up to him because I'm not the day-to-day operator. I'm not going to create more stress for him. If he wants to keep it at 3-4 employees, at several trucks, 40% profit margin over the course of the year, awesome. They're going to do about $150,000 in revenue down in Mount Vernon in terms of gross for the year. The Bellingham location will probably do like 1.6, 1.7 million in revenue for 2020, but obviously we'll know that at the end of next month. So I hope this was helpful for you. The reason I share this and I share both of them like this is because I want you to be inspired by the fact that, hey, I might be at the smaller location size, but hey, like I want to grow bigger. Maybe the Bellingham location is where you want to be at. Or maybe you are thinking about starting a lawn care business, and you're like, oh, well, I can't do it because it's only going to be, like, I don't want to grow big, so I'm never going to make money. Well, you can. You can make a very profitable operation if you have systems in place. And so do I think that Tim by himself could run the Mount Vernon location without Command Center? No. And I think he'd say the same thing. Like, to manage all the clients' emails, they did all the invoicing the other day for him, answer all the calls, send out all the estimates, do his, everything, billing, take the calls, credit cards, people changing, sending out automations. They manage his inbox and email for him. Like, I don't think he could say that he could produce that much revenue without them. And that is the effectiveness of having systems and having those things for your operations to be lean. And I think, I know that a lot of times, even when franchisees join Augusta, paying Command Center seems like a lot of money. It's like you paid $2,000. Like I said, 18% of revenue going to Command Center. But I can promise you, it just would not be possible without them otherwise. And if you were to go out and hire an office person, you'd be looking at least 40% more. But that right now is what we are kind of averaging out, is about 40% savings in comparison to a regular office member. And that's why we moved a lot of our when you go to the Bellingham location, the phone does not ring there. Right? They do not get phone calls. They all go through Command Center. We treat it just like a franchisee in terms of the calls going there and automations, everything going to Command Center. Actually, you know what? Let me actually pull up the Bellingham location and see what they paid for Command Center last month. I think it was like probably $4 or $5 grand. Oh yeah, right here. No, let's see here. Doing this on the fly. Not that one. Let's see here. Tool supplies, subcontractors. Where did they put it in? Somewhere in here. I think it was $4,000 though, if I remember correctly. They might have put it into here. I'd have to take a look at it. They might have actually not even been charged because I'm recording this on December the 2nd. But I know it was $4,000 and $4,400 or so. In terms of how much they paid Command Center. And that can seem like a lot, right? So I think that it's daunting for some people, but I know that by us spending the $4,000, we're probably saving another $5,000 or $6,000 on top of that. They would otherwise have to pay employees to sit there and do nothing when it gets slow. And where at Command Center, you only pay by the minute, you only pay by the estimate that goes out, so we really scale as you need us more. So, and I didn't necessarily mean that to be a pitch for Command Center, but that's really why some people wonder why Mount Vernon can be as efficient as it is in the spring and still be profitable, and then in the winter still get by, produce lots of revenue with only one person working, is because they have Command Center behind them. And so, anyways, hopefully that was helpful, inspiring to you. If you have any questions about the profit and loss statements, post down below. I'm a big fan of keeping them simple. So a lot of times some people are like, oh, you didn't break down this one item a bunch. There is definitely ways we can break this down more. When I go do my taxes, like I'm meeting with my tax accountant next week to go over the annuals, see where we're at. We do break it down more. But in terms of monthly profit and loss statements, I want it simple. I want to be able to look at these numbers, remember them, have them in my mind. Like I can remember certain ones all the time, how much we spend on fuel, insurance, things like that. I can remember that because it's simple, right? I only got like 10 or 12 expense items here, and so it's pretty simple for me to keep track of what's what and what's out of place or what is too high or too low and not normal. So I hope that was helpful. Comment below what helped you and what you might want to see on December's profit and loss statements, or what I can expound on more. I don't want these to be boring. I just want to share these every single month as much as possible, be open and honest, and so you can learn and compare to your business. And don't compare it, like if you're doing landscaping and hardscaping, don't compare it to these. We do not do a lot of COGS, cost of goods sold, because our cost of materials is relatively low, less than 4 or 5% usually. So keep that in mind. Don't compare it necessarily, but definitely I'd rather share these, have these numbers out here so you know how you can improve your business. I hope you learned something today. Thanks so much for watching, and you've been listening to the Business Bootcamp Podcast. I'm Mike Andes. We'll see you next time.